Hey folks, glad you could join us on this special conversation on Business Redefined. Increasingly, we have been having conversations about green finance and climate smart investments. Now, between the 28th and 30th of this month, all roads lead to one destination, the Edge Convention Center right here in Nairobi. Why? Because of the Africa Climate Investment Summit 2025 taking place here in Nairobi. And who's at the center of this? KCIC, the Kenya Climate Innovation Center. And we're privileged to have the man in charge, a good friend of mine, JM, Joseph Murabula. Karibu sana.
Asante sana.
Welcome on board.
Yeah, thank you.
So maybe help us understand, for those who might not be familiar, KCIC, what do you do? And tell us about the summit as well.
Yeah, thank you very much. So KCIC is an organization that looks for opportunities in the climate crisis. Everybody looks at it as a challenge, but we like to look at it as an opportunity. And the way we take advantage of that opportunity is at the intersection of enterprise and innovation. And we use the SME, or the small enterprise, as our frontline soldier, as our delivery model towards taking advantage of that opportunity. So for that reason, we are set up as a business incubator for climate smart businesses, and an accelerator for climate smart businesses. So what we basically do is we get people with ideas, innovations, technologies that are good for climate and support them to become businesses.
All right. Yeah. And the summit?
Yeah. The summit now is about practically translating policy pronouncements into investment flows. As you know, Julians, we've had two Africa Climate Summits now, one here in Nairobi in 2023, and another one in Addis Ababa in September this year, just last month. And out of those two summits, the policymakers, the leaders of Africa, came up with certain declarations, certain pronouncements. What, however, is missing is how to translate those pronouncements into investment flows to the small businesses, which are the most predominant kinds of business in Africa. In Kenya, for instance, we are talking about 95% of all businesses in Kenya being SMEs. So how do we ensure that we can be able to mobilize financing at a scale, but have that financing flow into the small businesses for purposes of economic growth and also fighting climate change? So that's the conversation we are going to be having at the Edge Convention Center next week.
Mr. Murabula, if I hear you right, because many players I talk to in the climate finance space, especially the DFIs, will tell me that on the one hand, we have liquidity sloshing around. On the other hand, we have the predicament of not having enough bankable projects. Are you telling us you are the sweet spot right in between there?
Yes, and this is why. Most DFIs tend to have relatively large balance sheets compared to the size of the economies. And because they have that relatively large balance sheets, their deal sizes are also slightly bigger. They are also bigger, and therefore they don't lend themselves to the small enterprises that drive the economy. And so you need the man in the middle. You need a midwife, so to speak. To
an intermediary.
Exactly. You need an intermediary to be able to take money from the DFIs, using their policies, using their deal sizes, and then give it to the small enterprises. And therefore, that's why I think organizations like ourselves then become sweet spots, so to speak, to use your words. Yeah.
So Murabula, give us some insight. How do you ensure that the businesses and startups that you identify and incubate are investment ready? Because many of these players, when you talk to them, someone might have a good idea, but their books are not in order. They don't even have historicals in terms of their numbers. How do you ensure they're investment ready?
So now, for all our programs, we run something we call an investor readiness program. The investor readiness program is basically geared towards addressing exactly that question. How do we ensure that these enterprises, given where they are and given their scale, are able to access financing? And so we support them in terms of ensuring that the governance systems work, that they have accounts at least for 3 years. Those accounts are looked at by a qualified auditor and certified that they have a story or a pitch for their business, that they have a product that can be offered to the market, but also importantly that it can fit within the wider policy environment. And we work with the government to ensure that there's an enabling environment to enable these enterprises to thrive and therefore be able to access funding as it is. Now, part of the challenge you have in terms of funding flow to this small enterprise is a question of knowledge and skill, as it is. And so we bring, therefore, what you call technical assistance to be able to bridge that gap, to make them ready for purposes of investment flows.
Okay. Mr. Mirabula, I'm still struggling with when you talk about yourselves as intermediaries, so to speak. Are you telling us that then, because many of these startups, if I could call them, would be fragmented and with small ticket sizes, do you play an aggregator role, or how does it work?
Yes, yeah, that's essentially the role we play. Most of the organizations that come to us are what you call idea stage companies, and therefore either they are pre-revenue or the revenues they need. The revenues they generate are minimal as it is, and therefore they cannot be able to meet the metrics required by large banks or large DFIs as it is. So what you need in the middle is therefore an aggregator, somebody who can be able to receive cash in bulk from the banks or from the DFIs, and then lend them at retail or in small bits to the small enterprises there, and that is the role that we play as it is. So in all our programs, we have an access to finance window, and that access to finance windows has various instruments depending on what the entrepreneurs need.
Wonderful. So does it take grant format, equity, or debt?
Yeah, it mostly depends on the stage of growth of the entrepreneur. At the very early stage, it takes a grant format because here you're trying to prove a concept. Somebody has an idea, but how do you translate that idea into a product that can be offered to the market? At that point, there's still no revenues, there's probably still no product, and most of the time, the business is still informal. It's not yet registered, and so it cannot take grant instrument or even equity instruments. It cannot take debt instrument or even equity instruments. So at that point, it's basically just debt. And then as it grows, now you've moved from the prototype, now you have a product, now you need that product to be standardized so that then it can be offered to the market. You need that product branded, you need that product packaged, and then you need the traceability to ensure that we know where exactly that product came from. Now, at that point, you can now have some form of blended finance where you provide grant funding, and then you have some form of owner's equity in there. But then as it grows, now you have market expansion, then now you can move to slightly more commercial money. Mostly you move towards debt at that point.
Some pretty good hand-holding there for the small businesses. Tell me something. In the recent past, we have seen a lot of efforts from the policy environment. Case in point, Treasury published the Green Fiscal Incentives Framework. We saw the Central Bank of Kenya coming up with the Green Taxonomy. From where you sit, what's your assessment of the policy landscape as far as green finance is concerned? And what do you see as the next steps in terms of accelerating this?
Yeah, no, Kenya has had a green business strategy since 2016. And as part of that green business strategy, various actors have come up with policies. The two you mentioned, the one by the central bank, the one by the
Treasury,
by the Treasury, are basically part of this. So in terms of a policy framework, we are not short of policy. The problem has been the way it is enforced, the practical mechanisms for enforcement. That is basically where the gap is. I'll give you one example, for instance. in one of our programs, we call it Sustainable Waste Innovations for Future and Transition. We started to work with 5 counties: Nairobi, Uasin Gishu, Kisumu, Nakuru, and Mombasa. And then we actually discovered that the basic challenge is not that you don't have rules, but you don't have technical staff who are able to prosecute people who do wrong, who injure the environment. And to be able to do that, all you needed was to attend 2 weeks training by NEMA, get certified, and that way then you get competent, you're considered competent to present your cases. And so our intervention then was basically to ensure that we are able to train. So we went around the entire 17 sub-counties of Nairobi, got 2 people per sub-county, so we ended up training 34 officers from Nairobi County, and now they are able to enforce compliance with the environment laws as it is. So the challenge is not one of a lack of policy framework or lack of policies as such. The challenge is one of enforcement and knowledge around it.
Mr. Murabula, many times we ask ourselves, if we are to really mainstream the subject of green finance, we need the commercial actors to come on board, commercial banks, etc. And the question always emerges, do we have a yield and impact trade-off? Because the argument is the reason why this space is dominated by DFIs is because they have no pressure for yield.
Yes, exactly.
Is there a point where you will say that there will be a justifiable case for commercial players to come on board?
The case is actually already there. You know, the two are not mutually exclusive. You can make impact and make money at the same at the same time, and do it at scale. And we've demonstrated that through the one sector that people thought had no opportunity for yield, and that is waste. Basically, the issue is just being able to find what that very unique product that you need to be able to provide to solve a human solution or a societal solution, and therefore make that impact, and the people will basically just, you know, buy at a price that gives you yield. Most businesses that have done well financially are businesses that solve real problems within society, and therefore they make impact at the same time as make profits as it is. And that's why in the earlier models, our green business models, we used to talk about a triple
bottom line.
Exactly.
Yes. People, purpose, and profits.
Exactly. People, purpose, and profits. So they are not exclusive. They are all, you don't have to do a trade-off.
Yes.
They can move in tandem.
Wonderful.
Yeah.
We can't have this conversation in 2025 without having sight of the fact that in the recently concluded United Nations General Assembly, the President of the United States termed all this green conversation as the biggest con game.
Yes.
And some players have told me that increasingly they're seeing the liquidity taps drying up, telling you that funding is becoming squeezed because of that posture.
Yes.
Are you experiencing it? How do you see the road ahead?
The reality is that the reduction of funding, especially concessionary funding, towards the green economy has been there for some time, because for quite a while the world has been moving away from aid to trade, and so people who depend purely on grants have had that squeeze for some time. So when, and remember, Trump said that last month.
Yes.
Basically, he said that last month, but he had already started to accelerate that process the first day he got into the office. If you recall that the first day he got into the office, he withdrew America from the Paris Agreement. And the Paris Agreement has a whole chapter on finance, on how to mobilize resources. And that means, therefore, that American public money cannot go towards climate, because America is not part of the Paris mechanism, so to speak. And so that process has been going on a while. When he said that last month, when he described the climate crisis as the biggest con, many were not surprised because he's a non-climate denier. So I wouldn't say that will accelerate the impact because the impact was already going there. Now, how are we dealing with this? So the landscape for development funding in general and grants in particular has been narrowing for quite a while. And as KCIC, we've been thinking ahead. And therefore, at this Africa Climate Investment Summit, we are launching what we call the Africa Climate Investment Platform. That platform will have a revolving fund. This revolving fund is basically our risk management mechanism against the drying up of funding in the future as it is, because what it will provide is provide continuity for a kind of work in the future once it's fully capitalized, ensuring that the small enterprises that we support continue to receive that support despite the fact that the international community may reduce the concessional funding available.
I'm curious from a capitalization standpoint on the revolving fund, what would full capitalization look like from a quantum?
Yeah, we expect it to be an $100 million fund when it's fully capitalized. Obviously, that is a journey. That's a journey. So there'll be several tranches as we go along. But in terms of sources, there'll be direct fundraising for it. We have quite a number of enterprises that we have funded that will also be repaying back. So that will help capitalize that fund. And donations and grants, which we still look for, will also help capitalize that fund. But the way we see it is that at full capitalization to be at least $100 million.
Mr. Murabula, one of the questions that dominates this discussion around green financing in the global south is why don't we deepen our capital markets far enough to allow us to be able to mobilize capital from those, whether it is blue bonds, green bonds, etc. Do you do any work around this? What do you see as the impediments to this? Because if you look at Kenya, for instance, Kenya launched its green bond framework around 2016-17. We have only had one. Why is that the case?
Yeah, the challenge has been one of trying to package these instruments or the projects for scale and for viability as it is. That, I think, has been the challenge, because for investors, it's just now that we are beginning to see investors who look at green or climate first and then look at return second. But the bulk of investors still look at the return before they look at whether you're green or not. They know that you need to be green, but the first KPI or the first metric is that you need to have a good yield for them, because of the way they raise funding on the other end, because the people they mobilize resources from still need a return as it is. So part of the reason green bonds have not really had a lot of traction is basically that we have not matured to a level where we think impact first, and then let's think return as a secondary consideration, or it's no consideration. There's already a growing community of impact investors who basically just look at impact only. They don't worry too much about return. There's a growing community, but it will take a while for us to
mainstream.
Exactly. it will take a bit of time.
All right.
Yeah, exactly. So I think it is an important thing that we have the green bonds framework, or the green investment framework as it is. I know that the Treasury is already working on a Kenya Green Investment Bank. I think, if I'm not wrong, the cabinet must have looked at that paper a couple of weeks ago. And that will then form as an instrument for mobilizing resources at scale and then investing in impactful programs. So now when instruments like those begin to become common scale, then you will see the capital market side also growing in tandem.
Final question, JM, and this is it. This is your opportunity to make a pitch. The summit taking place 28th to 30th. Why should it be everyone's priority to attend, and what can they expect?
Yes, exactly. At this summit, you will meet a lot of people. You will meet innovators, people who are coming up with ideas that solve the problems of the future. You will meet small enterprises, so innovations that are already growing. You will meet people who have ideas at the pitch level. We are going to have 2 dedicated demo day events, one for adaptation and the other for clean tech. At this summit, you will meet a lot of policymakers, people who are making rules, regulations, laws that govern the investment space. At this summit, you will meet people from the commercial banking sector. You will meet people from the development finance sector. You will meet grant makers. You will meet businessmen or entrepreneurs as such. And therefore, everybody will be here. Yeah. And so there's going to be space for everybody depending on what kind of conversation you want to have. You will meet everybody. And they'll not just be from Kenya, they're coming from across the entire continent as it is, plus the enablers from outside Africa. So there'll be people from all over the continent coming here to have a conversation about investment flows in all the climate-aligned sectors. So be it, if your interest is in agriculture, you'll find space there. If your interest is in renewable energy, you'll find opportunities there. If your interest is in waste management, you'll find opportunities there. If your interest is in forestry or nature-based solutions, you'll find space there. If your interest is in water, you'll find space there. So there'll be opportunity for everybody to grow their business, to grow their knowledge, and to grow their skill. And that's why you need to be at the Edge Convention Center from the 28th to the 30th of October.
And that's been our conversation with Joseph Murabul, the man in charge of KCIC, and the Africa Climate Investment Summit has already kicked off in Nairobi. That kicked off on the 28th. Today is the 29th, ends on the 30th of this month, that is October 2025. If you haven't made your way there, please ensure you do so, because as he mentioned, there's a raft of players across the value chain you'll be able to interact with and see how you can have impact in your investment in the economy. Stay tuned.